Hi, thank you for watching us here at Tax Talk UK, where we talk about all things tax and other important aspects of self-employment, all aimed at supporting you in your self-employment. So we've been asked to talk about MTD for landlords and what that means. Before we do, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information should you need to, as well as finding information that we have available on a whole host of other topics. If you want to be notified when we upload new guidance, then you should also turn on the notifications tab, and you can find the information that's specific to you through our playlist. You can go to the playlist and find, for example, this video will be in the Private Landlords playlist. So on to MTD for landlords. So making tax digital is basically a government initiative to digitalise tax ultimately, and it's been a sort of a staged sort of progressive implementation over a period of several years. So for example, businesses who are VAT registered now all have to submit their records digitally, and for sole traders and private landlords with an income over £10,000 will need to be complying with making tax digital from April 2024. So that sounds a little way away now, but of course that will come around very quickly. And what I would suggest you want to do is to have at least a full tax year of operating your records digitally before April 24, so that if you have any difficulties, if anything goes wrong, you can still, if you need to, sort of use the old-fashioned manual way that we previously would have used to submit these records. So in effect, that what making tax digital means is that you need to keep your records digitally using some sort of software. So you would find your making tax digital software that suits you. So as a private landlord, I would suggest that you want a product that is designed specifically for private landlords. You want a product that allows you to at least do a certain amount of the allocating of the transactions within the software yourself, if you don't want to use an advisor to do that. And of course, a software provider and a solution that's affordable, given the simplicity that we're talking about. Certainly the audience that we're talking to, we're talking about private landlords that maybe just have maybe just one property or a few properties, but certainly we're talking about individuals rather than commercial landlords. So you find your software, and actually it does make life quite easy, because you are then able to connect your bank account to the software. Now, when I say connect your bank account, what I'm talking about is a bank feed that authorizes your bank to send the transactions from your bank account to the software. So from the software, you can't do anything in the bank. You can't make transactions or authorize anything or see anything other than the transactions that have been filtered through, so that the sort of security of your actual bank account is separate. And what that enables you to do then is to simply allocate each of the transactions as they come through the bank account, to say whether they're income or expenditure, and categorizing them accordingly. Now, if you currently use one bank account for more than one purpose, including your rental income and expenditure, then of course you will need to think about having a separate bank account. So you don't have to have a separate bank account, but of course, if you're connecting the bank feed to the software, then you're then going to have a whole load of other transactions that are just going to need to be allocated as likely as personal and nothing to do with your rental income. But of course, it does keep it nice and tidy and more simple to have this in a separate bank account where you have your rental income coming in and you pay your expenditure from. Of course, if you've then connected your bank account, but you say perhaps use a different bank account to pay for something, maybe you don't have your card or for another reason, then of course it's important to remember that if you've connected a bank feed, then you need to think about other transactions that may not have come through that bank and make sure that you account for all of your income and all of your expenditure. And then on that note, another thing to consider is that if you are using an agent and they are making a deduction for their fees before sending the remaining income to you, you need to be sure to account for that as income and with a deduction. So you need to account for the full income and the fees that have been applied. But your software that you choose, if you choose one that's specifically geared for private landlords, should be able to accommodate that for you quite easily. So just to clarify on the threshold, so it's a rental income of £10,000 and above, which will mean that you will need to comply with the Making Tax Digital rules from April 24. So say, for example, at the moment, if your rental income is below that, then you won't need to comply with Making Tax Digital. But if you go over that threshold, perhaps if you maybe if you acquire another property or your rent increases to put you over that threshold, then once you submit your tax return for the year that you go over that threshold, then from the next tax year, you would need to start to comply with Making Tax Digital. So remember that once a tax year ends, you have the tax year ends on the 6th of April and you have until the 31st of January the following year to submit that tax return. So if that shows that you have gone over the 10,000 threshold for the income, then from the next April you will need to comply with Making Tax Digital. Although of course, even if your income is below £10,000, you can choose to opt for Making Tax Digital from April 24 if you wish to. And then also I should explain that we're specifically looking at the rental income. So you may have an other income from a different source as well. So say for example, if you have other income, if your rental income alone, the income, so not the profits, just the basically the rents that you have come in is under 10,000, then you won't need to comply, even if your total income is above. So then of course, if you are also self-employed operating as a sole trader, then those people in that category with, again, turnover over £10,000 will also need to be complying with Making Tax Digital. So if you are both, if you are a sole trader and a private landlord, then you would, both of those sources of income would be assessed separately. So it could potentially be that one of them you do need to comply from April 24 and the other you don't, or perhaps you might need to comply with both. And again, just to clarify, if you do have more than one source of income that requires you to comply with Making Tax Digital, you would need to have separate licenses for each of those sources. So once the Making Tax Digital becomes mandatory for those with sole trader income over 10,000 and or private rental income over 10,000, then as part of the Making Tax Digital, which means keeping your records digitally, you will need to submit a quarterly update to HMRC, which lets them know the income and the expenditure for the year to date at the end of that quarter, and then you will still be required to make a self-assessment tax return, presumably slightly reduced on what we need to do now, but nonetheless one will need to be required. So there could be a potential that you'll need to comply with Making Tax Digital for one source of income but not another, and the one that isn't will be declared on the tax return and the same way that you do now. So hopefully that sort of explains a little bit about what Making Tax Digital for Landlords is. Hopefully that gives you a little bit of an overview of what you will need to do. But as I say, what I would suggest is if you get yourself set up on some software as soon as possible, and because once you're set up on your software and you are maintaining your records digitally, then the actual submission, the quarterly submissions won't be very onerous. It will be the getting to grips with the software that will be the thing that most people, I would imagine, will find the hardest. And of course, if it's something that you struggle to do yourself, then you should engage a professional to carry this out for you. But similarly, it might be that at the moment you have an agent that does your self-assessment tax return, but rather than paying them to do the actual allocating of the transactions through the software, you decide to do those yourself, so that they're still getting the same level of income as level of information, sorry, that they're getting currently. But if you do want them to take up the whole package, then you should speak to your advisor as soon as possible. And of course, if you are engaging a professional to help you with something, you should always make sure that they are fully qualified to do what it is that you're asking them to help you with. They're a member of a professional body if that's applicable, and have professional indemnity insurance. So hopefully this has helped. And as I mentioned earlier, please do take a moment to subscribe to our YouTube channel. And thank you very much. Thank you for watching. Goodbye.